It's Monday, March 22nd, 2021. I'll do an update on my Robinhood profile. You see today down 6.49%, minus 3,186.92. Up in the after hours, 150, but that's kind of deceptive because I did a covered call and brought in roughly $6,000 of premium. That's not going to show up until it expires. So if everything goes right and all the values of this account stay the same over the next 4 weeks, it should show a bounce increase of about $6,000. And I'll show you what I did. First of all, I sold out of most of my stock positions that I was using for covered calls. I had a position in CCIV, I had a position in Palantir, had a position in Solo, LPCN, and a few other stocks that I got, from the hot stock plays of the week from other people. That was a mistake, but I decided to cancel all my subscriptions to other YouTubers and I'm done watching other YouTubers' videos, because a lot of these people, they're kind of like a guitar teacher that has a few lessons ahead of their students. They know a little bit, but not really as much as they lead you on to believe. And their channels are all based on trying to get views. So they're going to give you a hot play every week. They're going to give you 3 new picks. I mean, no one's going to give them 3 new picks every day. And their whole objective is to try to make as much money off of you as possible. And I'm just kind of sick of trying to hear about somebody get me to sign up for Webull, to get me sign up for Coinbase, to get me to sign up for the Patreon, their Discord, their, course, whatever, man. And these people, honestly, I already feel like I know more than them. And in the 6 to 8 months of trading I've been doing, like, they'll talk and they'll say stuff like, wow, that's fundamentally wrong. Like, they'll say something like, the stock went up today before it crashed, that means it's strong, and which is fundamentally the opposite. If a stock goes down, that means it hit a resistance point and it's quite a bearish signal, or something along those lines. Or they'll say, I sell puts because selling covered calls is not worth it. Well, selling puts and selling covered calls are pretty much the same thing, just about. There's a few slight advantages one way or another. It really depends on the stock, but your premiums are going to be pretty much the same whether you sell or put covered call. Covered calls tend to give you a little more premium, and I feel like they give you a little more control. So it's stuff like that. I'll hear from people, saying that they're going to bring in 8 to 10% premium, and in 10 months they're going to have $1 million or something like that. Just ridiculous things like that, where they're not telling you the downside risk. They're not telling you, whatever. They're just trying to get money out of you. They're trying to get you in their Discord. They're trying to get you, hot plays or whatever. And a lot of the times they just pull up a Yahoo article or a finance article and just read it to you. So, yeah, I decided just to cut them all off. I'm not going to follow any more YouTubers for suggestions. I'm going to go do my own research on bar chart and some of the other. Well, I have a subscription to bar chart. That's why I use that so much. But some of these other sites, I might see what kind of tools they have on it as well. But, yeah, just these YouTubers are ridiculous. They'll give you like 4 new plays every day. And there's no reason to get in these new plays, and they're just recycled. Like, they're the same plays, everyone. And then they talk about valuations and Tesla going to 3,000 because Kathy Woods did it, and they getting Kathy Woods playing the copy Kathy Woods. I mean, she's a brilliant investor, but I looked at Tesla and trying to justify that valuation. I just couldn't justify a lot of these EV plays too. You just can't justify the valuations, like a bold leap of faith, and I don't want to take that much risk into the future. You really, really gotta believe that their technology is going to change and going to be successful. Like, you gotta believe that robo cars are going to be a thing in 5 years, and I simply don't believe that. because, driving for Uber gave up on the robo taxi program because they killed someone. And the funny thing is, when a machine kills someone, people are a lot less tolerant of that than when another person kills someone. Even if the machines are safer, they're going to be suing Tesla, and they're going to be suing anybody that has these robo cars, because they're going to hurt people. I mean, it's just statistically something that's going to happen. And yeah, they're going to get a lot of pushback. They're going to get a lot of lawsuits. And right now, Tesla, the quality of their cars isn't up to speed either. So yeah, that kind of is my little rant about watching people's on YouTube. So just be very, very careful and do your own research, and just realize that a lot of these people really have a limited knowledge, and they want you to believe that they know everything, or they have these picks and they know these picks. If anybody tells you a stock's going to double, or they never lose money, or anything along those lines, it's crap, because there's no way you could tell the future. So you can't tell if the stock's going to double, and you're always going to have to lose a little money. Even if you sit on a stock until it recovers, you lose money to opportunity cost, because you let that money sit, and you let that money sit until it came back to break even plus 2%, where you could have put in another play that made 10, 15, 20%. So really, you're losing money by sitting on stagnant plays. And that's kind of why I decided to sell Palantir and CCIV and some of these other stocks and get into a different covered call. And I'll show you right now what I did. So after I sold that, I bought this FREQ frequency this morning. I piled in about, I think my cost basis was about 20,400 at an average cost of 34. And the reason I did that is I was looking through bar chart for the options, the covered calls, and I have my screener. I have my preset screener, and this allows me to see covered calls that give the highest premium. Well, I went to potential return and frequency. Well, here you can see it's 41.8% for a strike price of 35. It was roughly that this morning. I pulled in by buying this, so I'm going to show you guys how to do a covered call in the future live. But basically, I bought 600 shares, an average cost of 34, right? And then I went and I sold a covered call against those 600 shares, which is right here. Those 600 shares allowed me to sell 6 covered calls, and I pulled in an average of 1050 per covered call. Now that 1050 translates into $6,300 of money up front just for holding the stock. Think about that. $6,300. It comes off roughly 33%. So 33% of the value of owning the shares I get right away, regardless of what happens to the stock. So I took in that premium this morning after selling these frequency therapeutics, and I did look at the news. I did look at the chart a little bit. It looks like they're basically a biotech company that has a system that helps with hearing loss or vision loss. I can't remember exactly what, but I saw that there's pretty decent support right at this 34 range. It looks like something happened where it had a huge run up and a drop, and it's now starting to recover. And I looked at the analyst ratings, and most of them are buys, and the target high is 79. And there's unusual option activities. If you look at the news and the headlines, do option traders know something about frequency therapeutic stock that we don't? So whenever there's an insane premium like was going on, it's usually maybe the insiders know something. Or you can see later this morning it ended up getting upgraded to a buy by Zach's stock. So I don't know if this will stay above the strike price, and hopefully it does. And even if it runs up, say it runs up to $50, you could usually, if it takes off like that, you could usually exit the option and the covered call for like maybe 60 to 80% of that 6,000 premium. So you get you'll take home maybe 4,000 for like like say it runs up to 60 tomorrow, you'll take like 4 to 5,000. You don't even have to wait that month, just because the way options work out. But as you can see from an accounting difference, because the stock price increased, the option price increased as well, and it's showing a negative $1,200. That means I have to pay $1,200 more than what I took in. I have to pay $7,200 to buy it back to lift my obligation. And this is just the way the accounting works in Robinhood. When it goes to expiry, that number might be different, but it ran up to positive 1530. So just know that at the end of the month period, if everything stays the same, the 6,000 will display in my profit and loss. Right now, it's not really displaying my profit and loss because of how the accounting works out. If I wanted to buy it back, that's kind of how it shows it. And I will try to make another video later to explain this. But yeah, once I took that $6,000 of premium in, I used it to buy a leap option on Lamb Research. These were pretty expensive. They were out of the, so I had to buy one out of the money. I went 1 year out at $640. Currently the price is $560. I'll probably end up adjusting it if it doesn't move too much. Lamb Research is a semiconductor equipment manufacturer, and with the semiconductor shortage and the chip shortage going on, they are poised to up production of their equipment to give to the customers like Taiwan Semiconductor and Intel and other chip manufacturers, so they can actually make their chips. They make the machines that make the chips, so there is a huge demand for that. So that's kind of why I got into that option. And also the other option I bought was Airbnb. 1 year out. Again, you know, being expensive, I went out of the money. I tend to try to get more towards the money, but I can make the adjustment as I go, especially if it doesn't take off in the next month. If it takes off in the next month, I'm golden, man, you know. But if it doesn't take off in the next month, I can move the option down for less than the difference in the strike price. So if I move it, say, to 230, I might pay $200 extra dollars, and at the same time I'm gonna try to take in premium to help pay for that. So just getting in was more important for me when I get into these plays, because they're long-term plays. You know, little fluctuations like that aren't gonna upset me too much. It's just when it gets closer to expiration, that's when you start to see the bigger losses. But yeah, just getting out of those stagnant plays like Palantir and CCIV, and I already had an option sold against BNGO, so I couldn't really get out of that, so I'm just letting that ride. And same thing with FinV. At the end, that'll bring in another $400 to the balance sheet as well. I know that might be confusing for those people that aren't used to trading options, but those were the plays I've made today. So I bought that Airbnb option. I bought that Lamb Research option. And also I did one more thing. Skills. I moved my skills option from, I had the expiration date in August. I moved it to December. I don't remember how much more I paid for it, but I moved it to December. And what that did is it separated out from a calendar spread, because I had sold an option against it to get into it. So skills, the option I sold against it was at plus 152. So, you know, that's I kind of deducted $185 from the price when I bought that first option. And that's going to probably expire worthless, because the strike price on that's $40. Unless skill gets up to that, then I don't have to really worry about, you know, potentially buying it back. Skills right now is at 2509. If it gets there, then I wouldn't mind as much anyways, because that means my long-term option would be appreciating at a pretty rapid rate. But I just took, you know, slight risk that it wouldn't get to that 40, and I would just use that sold option to take a little premium off of it. But overall, you know, somewhat down today, but not much to worry about, especially with that frequency going in the right direction, so that'll probably get my account moving in the right direction. And the long-term options, eventually I hope to see them move in the right direction. And that was kind of my little rant about following other YouTubers. I'm gonna make one more video if I have time tonight. I'm gonna try to look at the earnings report for this week, see if anything interesting pops up. But yeah, that's pretty much all my plays I have for this week. Just kind of want to look at the stock market overall in a whole and just kind of see where everything is at. But yeah, that's it for me for today. No longer following any other stock YouTube channels. Trying to just focus more on reading what's going on and looking at the actual price option, and getting away from these clowns, because they're freaking clowns, man. Every single one of them. Sign up for my Discord. Sign up for my option alerts. Sign up for Webull. Sign up for Robinhood. Sign up for, my course and this and that. And like, dude, if you're making so much money off the stock market, why you care about getting 2 free stocks off of Webull so much? It's ridiculous. Even the guys making the money, you could just feel the greed. Some of these guys making all this money, ad revenue off their videos, and they're still asking you to sign up for Webull. It's crazy. Like, I don't know, but that's kind of my little rant. It's kind of pissed me off just watching the videos and hearing their mistakes when they talk too, because there are definitely gaps in these guys' knowledges that you might not pick up on, especially if you're a beginner. So just be really, really careful listening to other people. I know I listen to some people on some plays and I got stuck holding the bag. So I just got to make sure to do my own due diligence and, look at my own methods. Because when I was doing my own methods, my account was growing pretty rapidly. And now, last month, because I got stuck in some of these other plays, it just killed my account growth. So you can see, a year ago how much I'm up, or 3 months ago how much I'm up, month, week, and today. So hopefully I can get back on the right path. And I just believe in compound interest and getting some of these covered calls. I'm using the covered calls now to build a longer term portfolio. That was kind of my goal, but I want to get back to some shorter term trades once I feel like I've got a little bit of these wealth building stocks and not so many of these speculative stocks that just have killed my account over the last month. Just being smarter in my plays, smarter in my research, smarter who I listen to, and get stuff that makes sense, especially with the recovery. Airbnb is a good one for the recovery. I was also thinking about Uber, but I know Uber has a lot of financial issues as far as profitability. But with people going out, Uber was dead for a long time. Like, no one was taking Ubers, and now everyone will be taking Ubers and going out to the clubs and whatever. And maybe food, alcohol companies, also Disney, like I said, movie theaters. Viacom has skyrocketed in the last month. In fact, I'll show that real quick, my watch list. So I get these charts of the day from Bar Chart, and you can see the performance over the last month, what has been really performing. Viacom, Calix, Analyst Data System Corp, Sally Beauty Origins, Extended Stay America Hotels, Super Microcomputers. Semiconductors are coming back pretty strong this week. So the other thing is the railroads. Railroads are always solid investments, so I might look to get into those. But right now, my money's already spent, and I just got to hold this option for 1 month, and hopefully it doesn't lose any value. If it doesn't lose any value, then it'll get called away, and I'll get a chance to buy more stock and sell more options against them, buy more long-term plays, keep buying long-term plays, keep building the portfolio. I'm going to make videos showing live examples of how I plan to do this, or how I am currently doing this, so that if anyone's new doesn't really understand options. I know it's confusing as hell selling options and buying covered calls and calendar spreads and diagonal spreads. I mean, all that probably sounds foreign to anyone listening that doesn't have really a background in it. And leap options and blah blah blah, or how the Greeks work. So I plan on kind of adding more information in as I go, but I'm still building my system. I'm still relatively new to trading, but I know I spent 3 months where I would trade and I had time off. My workload wasn't really big, and I just freaking watched every single video I can about stock trading from like professionals that are in candlestick trading and professionals in option trading. Not necessarily these YouTubers that pick picks, but people that actually have the background, Chicago style floor option traders that put information out on the internet. And I was able to learn quite a bit, and hopefully I could learn more as well as I go. But I know how to do at least all the option orders and kind of how to find them. I just need more practice. So I plan on doing some of the more complicated option orders too, like the butterflies spreads and the iron condors, and I've done some of the other spreads as well. But for now, that's kind of where I'm at with my account, and hopefully in a month you'll see at least $6,000 on there, and I'll keep that rolling and compounding that way, and adding these leap options. Hopefully some of these leap options start to pay off. As you can see, most of them are in the red right now, and when they're in the red like that, you could always move them down a strike price, and you could pay say, let's go with the lemonade. I'll show you real quick. So I have the 1 year option. This is kind of like averaging down, or buying the dip. You could sell the one you have and buy the next one down. See, it will only cost you $1.55 or $155 to move it down 5 strike prices, and as you get closer to the expiration, that gap becomes bigger and bigger. But since I'm so far away, all you need is $1.55, and you can even finance that by going to the front months. And this is a little bit of a gamble, but selling this option right here, and all of a sudden you're paying 10 cents to move that down, as long as this doesn't go above 111 in that period of time, which the market has been kind of sideways lately. It probably won't. It's just, you never know when that explosive period is going to come for your option, and you might have to buy that back at a much higher price. That's kind of the risk you run when you sell against the front options. But lately, it hasn't been too risky. You just got to look at the candlestick chart, the news, the catalyst, and make a decision based on what you see. And a lot of times, they'll expire worthless, and you'll just be adding to your account as you go. So that's kind of all I have for now.